Hello, everybody. Welcome to this live coverage of the U.S. gross domestic product live coverage. It will be the first revision of the last quarter of 2015. The U.S. Commerce Department is set to announce its revised estimate for that period, but the government initial figure show a growth of 0.7, but that will be likely to be adjusted down to 0.4 in annual rate as a result of lower inventory accumulation and weaker reading for both. Yeah, investment in residential and non-residential investment. I am Mauricio Carrillo. Sorry for not telling you before. I am broadcasting from Center, Florida, and I am with Yohay Elam, and he is in Barcelona, in the East Coast, in the South Coast of the Europe, and Dale Pinkert, that is broadcasting from the south of the West Coast in the United States, from San Diego. Hi, guys. How are you?
Hey, good, Maury.
Yeah,
Yohay, how are you? So I'm thinking that, normally this isn't a big mover, but with what's been happening in the markets, it may have more impact than usual. What do you think, Yohay?
I certainly agree, especially as it's Friday and it's sort of the GDP has the last word of the week, so it could have a bigger impact even though it's the second release, not the first one.
Oh, that's the second. Oh, okay. Okay, so my bad. So what we can expect, Yohay, today?
I think it's going to be a bit messy. Of course, I don't have any other expectations except the ones we have, a small downgrade. But the components also matter, so if it's downgraded because of inventories, it's not that bad. If it's downgraded because of personal consumption, it is relatively bad. In any case, it will not impact the March decision of the Fed because rate hike is already priced out, totally priced out for. I mean, it's not for the Fed. So yeah, it's also important to remember that we have other figures released: personal income, personal spending, and the Fed's favorite inflation figure, the core PCE price index. So let's see how it evolves.
This recent recovery has taken, this recent S&P equity recovery in the U.S. has taken a lot of people by surprise. Everyone was expecting a breakdown in the S&Ps under 1800. I didn't think we were going to break down. In fact, I remember Adam Button asking me at the end of the interview, kind of put me on the spot. He said, well, Dale, you were bearish the S&Ps all last year. I'm pretty bearish now. What are you thinking? And what I said to him, and it was actually here the day before the low, is I expect a low this week and a better shorting opportunity in April. So this is exactly what my view was, that we were going to rally into the equinox, possibly into April. A lot of people now are talking 2080 as a possibility. You just take the 140 pip range, 140 handle range with a breakout at 1940. Your first signal that something is amiss would be us closing back under the breakout, which would make it a fake breakout. I think we could pull back, but I'm still not looking for a washout under 1800 until the summer or fall. Maybe we peak April, May, sell in May, go away, break into late summer, and then have some type of recovery into the election. But the bear case is we're going to have, if you miss this, the market may be setting up another shorting opportunity. And I'm thinking that the market doesn't turn down until the dollar turns down. What do you think, Yohay? Seems like the strong dollar, strong equities is a correlation that continues to work.
Yeah, I think now that sort of a rate hike is off the cards, and then we have good data, it's more US dollar positive for stock markets. The stock markets don't worry because they have the Fed on their side anyway, and if it's good news about the US economy, it's good news for the dollar, good news for stocks. So it's in the past 2 weeks or so, I think everything is a bit more straightforward, a bit less risk on, risk off, a bit more dollar up, dollar down across the board, especially with the euro.
Yeah, and every time I've been looking at this as being the beginning of a correction that could work lower, but we've already rallied to 98 and a half is really the line in the sand. We start closing over 98 and a half, that'll probably be like 108 euro. then I think we could blow off to new highs. But I was thinking this week that we could at least pull back, get some type of pullback under 96.5, maybe take the euro to 111, 110. But these have been pretty confusing and conflicting markets in FX this week. A lot of the U.S. dollar yen bears, Yohay and Mauricio, thought we were going to collapse, and we double bottomed there at 111.
Yeah, very nice.
Yeah, so a lot of correlations are unhinged right now. So, you know, if a lot of people are having a difficult time trying to understand how the jigsaw puzzle comes together right now, it hasn't been that easy.
No, the biggest change for me was the behavior of the euro. It used to be sort of the safe haven. Okay, second to the Japanese yen, but still rising on global bad news with falling oil and the other way around. And now it switched camps. It became more of a risk currency, going up and down with commodity currencies with the pound. I think this could continue through to the ECB meeting on March 10th. And my tendency is I'm bearish on the euro dollar because I think we're going to have more speculation about the ECB. Then we'll have to see if the ECB delivers or not. That's a really different question. But
we also have G20. We also have G20 this weekend, don't we, Yohay?
Yeah, we have it.
Okay, so you know, I think the market might be looking for something out of the G20. I can't remember the last time anything major impactful came out of it, but it looks to me like the market's expecting something, maybe some kind of statement about China stabilizing their currency. That's something else that's going on. You know, when you talk about the yen, I had an interesting interview with Raghi Horner, and she said the yen serves two masters, okay? Not only just what happens here in risk, but the Nikkei as well. So, interesting comment that the yen has more than one master now. Mauricio is my master. That's all I can say.
No, really.
You also, yeah.
Does he boss you around like he does to me, Yohay? Come on.
I'm oversold. Okay, so but Dale, in your comment about the stocks, I know that you say, okay, this is perhaps we'll see a sell in May and go away, but if we sell in May, we will not have any kind of growth this year because you know the stocks are in red this year, and if we sell in May and wait for September, September will be just 2 months ahead of the presidential election. And then 2016 will be a red year. Do you agree with that?
The comment is don't sell in May and go away, wait for the September, like a month or two in front of the elections to sell. Is that the comment?
Yeah, you know, this is we are in a negative performance right now with the major indexes. So if we sell right now, we will sell losses, you know?
Okay. Well, I think that's possible. I know some people are saying that this secondary rally will not peak until the summer. So that's a possibility, maybe around the solstice in June. I don't know, September. I was figuring we'd go down first and then rally into the October-November time frame. The market hopeful, which I think is ridiculous, that, you know, perhaps they get the candidate that's going to fix everything. And I don't think that with what's happening on the globe and even the U.S. talking about the Fed is, you know, tightened, but on the other hand, they're talking about preparing banks for negative interest rates. So, very confusing picture. But you know, you can't even rule out one more high in the S&Ps. We talked about that in Lars being a possibility, maybe 2,200, and that most likely would take until the summer or fall. So, you know, I keep an open mind, and it's very possible that that was a very valid comment.
Okay. Did you see the debate yesterday, right? What do you think about that? Donald Trump will get the ticket or no?
Yeah, I just think what I think is going to happen is the establishment is so against Trump
Yeah.
that if these guys stay in and they pick up some delegates, and Trump does not have a majority of delegates, say Cruz wins Texas, and by some miracle Rubio wins Florida, that people were talking about this quite some time ago, that the nomination, the convention can turn into a brokered convention.
Yeah.
And then the power brokers, which aren't really in favor of a Trump presidency, could steal the nomination from him.
Yeah.
So I think we may go to a brokered convention just because the powers that be, you read about what the conservatives have written about Trump, and guys like Mitt Romney coming out and saying, show your taxes. He's an outsider. He's hijacked the Republican Party, or in his words, has made it broader. So there are forces within his own party that do not want him to win the nomination. So a brokered convention is going to be their only out to steal it from him, in my view.
Yeah, that'll be stealing it from him because he still is receiving most of the votes. So I mean, the biggest minority at least. So
Okay, guys,
seem to be in trouble. Yeah.
we are just 1 minute to go. So we are expecting
Yeah.
for 0.4 rating, right? In the
10 seconds.
Yeah. Let's see what's going on here.
I'm looking for a weaker dollar on this.
We can learn after
1%. 1% upgraded. Positive
Wow.
surprise.
positive.
Well, the dollar, let's see if the dollar can make hay on this strong number, because it sure hasn't sold off on weak numbers. Let's see what it could do on a strong number. Not impressed yet.
So that's a strong dollar, right?
Stronger dollar, yeah.
Yeah, but
almost falling under 110.
When we have euro under pressure, like in the Draghi days, 18 pips to the downside is not that convincing. For a
No.
strong number that surprised the market. Just what I'm seeing.
Yeah, looks like euro dollar is hugging 110.
Mm-hmm.
Wider range 109.62.
Dollar yen at
110.70.
highs. Dollar yen at highs right now.
Also, the crude came to life. Maybe finally, now that I'm not on it anymore, it's going to make that move. It wore me out. I got out a week ago, made money, but now it looks like perhaps we're going to make that move to 38, 37, 38. How are commodities responding to this? The platform's slow.
Let me check.
Getting anything in gold or anything? Okay, there's crude's making new highs. Crude likes it.
Sell gold.
Already on.
Yeah, gold is down, but it's
So
inside range.
this is gonna put the talk of another hike on the table. What do you think? Even though maybe it'll happen before June 2017 now. What do you think,
I'm
Yohay?
not very sure.
That's from the future. I guess it'll sort of lift the chances of a rate hike in 2016, but not in March, not in April. The Fed already commented a few times that it's standing to support markets, maybe not as dovish as markets would want, but it doesn't. It's also, this figure is for the fourth quarter, and sort of an upwards revision from 0.7 annualized to 1% annualized. Again, it's not quarter over quarter. It's good news, but I don't think it rocks the boat for Janet Yellen.
Also, consumer spending has declined, right? I think.
Check that out.
Yeah, personal consumption is lower.
I'm not spending a lot.
Everybody should do their share for the U.S. economy.
Yeah, keep the economy going.
Buy stuff you don't need.
Price up, yeah, consumption expenditures price up, but personal consumption was kind of lower.
What's the core PCE price index? Let's look for that, because that's
Let me check.
No, it was euro stopped at a pretty important point at 110.80. That was the high of the Draghi smash of the dollar, you know, and that's all we've rallied back to. Maybe we're going to make another trip down towards 109.
Yeah, I see a clear range, 109.60 to 110.70.
Yeah.
Finally, some clear range in euro dollar.
Maybe 940, yeah, maybe 940, 920. I don't know. I just have a hard time wanting to buy the dollar right now.
Anyway, we're seeing a stronger dollar on this news.
Yeah.
Still, it's not the Draghi drama, but
Well, they say the increase in real GDP in the fourth quarter reflect the positive contribution from personal consumption spending, that is PCE, residential fixed investment, and federal government spending that were partly offset by negative contribution from exports, non-residential fixed investment, state and local government spending.
Tolson and Lahr has made an interesting observation. I've been watching it lately that whatever directions the markets are going into the U.S. Open, that in the U.S. they try and turn it. There's been many reversals where things have started off lower in the S&Ps, and then once the market opens, they bring it back, and reversal action after the U.S. Open. So let's see where the euro's at going into the U.S. Open, which is a little less than an hour away. I think he refers to the S&P or NYSE Open. But I'm not doing anything. I don't know. You know, I put out a tweet, Yohay. I want to ask you guys this. Do you ever hear yourself saying to yourself, I need to find a trade? And anytime you're in that type of mindset, you're looking for trouble, because really good trades, they smack you right in the face. You don't have to search for them. They end up being too compelling for you to ignore. But I remember for many years, I need to find a trade. I need to find a trade. And you really don't. You need to delete that thought. And, you know, I guess it comes back to FOMO, right? Fear of missing out on something.
Yeah.
You ever hear yourself saying that, Yohay? I need to find a trade.
Yeah, goes well with the song "I Need $1." So
yeah,
the itch, yeah.
Yeah.
Okay, you ask your US core PCE for Q4 came at 1.3. That is above estimate.
Yeah, I think it's also good news for the Fed because it's their favorite inflation figure. The last two rate decisions, they've been saying that inflation is too low. They've been sort of putting an emphasis on inflation. We know that the core CPI came out better than expected at 2.2, but this one is more important for them. It's still under 2%, but at least it came out better than expected. So
yeah,
again,
but there are
sorry.
No, yeah, go ahead. Sorry.
No, I say again, it doesn't mean any rate hike coming anytime soon, but sort of it's still good news for the US dollar, bringing it forward from very far in the future to a little bit closer.
Yeah, but there are two clouds over the sky. There is the outward adjustment in inventories. The inventory has risen in the last quarter and falling imports. So that's pressure to the upside in the GDP. Yeah, but stocks like it, so stocks we can expect a rally in the stocks, right? A rally in the dollar, yeah.
Yeah, we are seeing stronger dollar, especially against, well, looking here at euro dollar, sliding towards the lows of the week, and dollar yen tickling the highs. Regarding stocks, that's Dale's department.
Okay, how about going back to your department, Yohay? I see that we're not quite there yet. We could have one more push up, but euro pound is now, you know, maybe back around 80, 50. I think it could complete a 3 drive to a top formation on the daily. So it's been a great run from 70, almost 1,000 pips.
Yeah, I can thank the
Any view on Euro Pound up here?
Ah, interesting.
I think it's a bit perhaps overbought. I mean, for fundamental reasons, we had the pound collapse because of the fears of Brexit. I think it's markets overreacting as usual, and eventually Brits will decide to stay in, and I believe some opinion polls will begin showing that. And for the euro, I expect more pressure towards the ECB meeting. So it's been quite a nice run, quite a nice chart, but I think. Yeah, I don't see it. I mean, the chart to me doesn't say overbought, but fundamentals tell me that it's a bit too far out.
So if you show my chart, Mauricio, I'm showing it now. The
Go
three
ahead.
potential three drive to a top. Here's one, here's two, and we need another push up towards 80. But as you can see, we've already had two non-confirmations here. So this could be an interesting top pick situation. I'm not going to do it today, but next week if we get another run, I'll be interested up around this 80 level.
Yeah, interesting. And guys, what do you think about the euro Japanese yen? You have any particular view on them from that? On that? Dale, Yohay?
125 is a pretty important area. It's rallied back to. I can't get bullish euro yen here yet. It may be a bottom, but we've already had a nice run from this week's lows. 125 is a major problem, and at the minimum, I expect us to retrace this recent move from 2.5 to 5. Maybe 150 back. Let's see what it looks at 3.5. But I actually know guys that are saying this is not the low in euro yen, and we're going under this 122 level towards 117. So I would say negative until we close over 125. Then maybe the picture changes.
Yeah, I agree with Dale. My reasoning is that bearish on the euro, as aforementioned, because of the ECB. And markets are sort of calling the Bank of Japan's bluff with the negative rates. It didn't work out for the Bank of Japan. So I think next time we have some kind of negative move in markets, the Japanese yen will strengthen, the euro will not. And so perhaps we haven't seen the bottom yet. Looks like a correction to me as well.
So for you, Dale is bearish until the
Yes.
Fed can go above 125.
Alien Ovicho showed a chart that a few days ago that showed the recovery being possible to 125, and then he's looking for new lows. He's a very good trader, very good tactician, technical analyst. So
So do you expect
I don't like to be on the other side of an alien,
yeah.
because then I'll get abducted, and they'll do all kinds of experiments on me, and I've already let American doctors do enough of that on me.
Yeah.
You think I'm funny, guys? Give me a why if you do.
Why?
No. No.
Okay.
No,
I
it's
think
okay.
I'm hilarious. How's that?
No, you're funny.
I'm my best audience. My dog Rusty also thinks I'm pretty funny. He'll listen to me talk to myself. So, kind of a non-event on GDP, but you know what? Maybe all of this lower oil prices, because retail stocks have done well. The leaders from last year are not the same leaders this year. Maybe the oil savings that the consumer has, that they're finally beginning to spend it.
Yeah. How much is the cost of how much is the gallon of gas in San Diego?
Well, in California, really never. It's about 220, but there are a lot of a lot of taxes, state taxes.
Yeah,
there are also refinery issues from a year ago. But I've heard in Middle America you could find it for under $1 a gallon.
Yeah, I am paying 160 160 per
Okay.
gallon here in Florida. I remember to pay. I remember paying like $5,
Yeah.
$5,
Yeah.
like 3 years ago in California, in San Francisco. It was amazing.
So we know you're tight with your money and your savings, but are you spending that extra money, Mauricio?
Well, I'm paying extra gas in flight, in airplanes.
Are you sending your savings to your girlfriend? That's what I want to know.
Exactly.
Yeah.
Are you spending that extra money that you pocket got or not, Dale?
Uh, you know, money comes and goes. Time is gone forever. So yeah, I spend money. You know what? You can't take it with you. I
Yeah,
even
that's
tell
correct.
people. I
Yeah.
even tell people after a windfall in trading to pull equity out of their account and spend it and enjoy it because it makes it real. Or put it into some kind of conservative investment, maybe buy some precious metals, because when that equity is in your account, it's like chips in Vegas. The money doesn't seem real until it's in your pocket, or you have to or want to spend it. So I really think that people should get in the habit of, when they have windfall profits, to pull equity from their account and spend
Yeah.
it, make it real.
Yeah. Enjoy it.
Yeah.
Yeah, there is a soccer player in UK, that is your best. Once he say, I spend a lot of money on cars, women, and alcohol. The rest I just squander. I just wasted. I wasted the rest of the money.
Yeah.
But that's it. Enjoy your
Ah,
money. Enjoy the time that you have here, and
right.
what you do.
Enjoy your
Yeah.
life.
Yes, exactly. So what's the situation right now? I want to ask you, Dale. Dale and Yohay, what's the situation right now? What we can expect for the next hours and for the week ahead? In the forex market. Do you want to say something, Dale? What is the situation right now?
Yeah, I think it all comes back to the Dixie. I thought 98 was going to be it. Obviously, it's not. Maybe we're heading back up to 98 and a half or a little over 98. I still don't want to buy the dollar here. I still think we're not going to straight line the new highs. If you look at this Dixie chart, this was near a 61.8. Sometimes things can extend 98.6. So to me, when I used to run or facilitate rooms, I always felt the pressure of having to come up with an idea. So my idea is none for today, but possibly next week I'll sell in the Dixie.
Okay. And there is a question in the room about the GBP. Dale, you can share your thoughts on the GBP, the sterling.
Hmm. What's the question?
Yeah, well, your thoughts. If you expect more bearishness and what is the levels to watch.
I'm not impressed. If you show my chart at the lows, there's no divergence. There was divergence in the euro. There's still not in the pound. I would expect new lows. In fact, we're so close now, if you look at your monthly chart, to the lows of '08.
Yeah. Lowest since March 2009.
You
Mhm.
know, let me. I guess it's not going to go
Yeah.
back that far anymore. Oh yeah, here it is. So here where your this was the
What's the
low in
level
the
to watch?
financial panic. Yeah, 135-ish, and why not go there? And we had confirmed lows there. And you know what's interesting? A lot of things are at '08 levels. Deutsche Bank underneath it. Oil at '08 lows. Pound
Yeah.
approaching '08 lows. The only thing that isn't are equities. So a lot of things have completely retraced all of the gains that we've had from '08, and the pound's the next one to enter that category. So bearish.
Okay.
Maybe that's how EG gets up to 80, and not because of euro strength, but because the pound is weaker than the euro.
Yeah, next moves for the pound depend, I think, on the next opinion polls over the weekend. If we have a strengthening of the exit camp, then it slows. I think that, again, there will be a majority also in opinion polls for staying in, and that could support the pound. But it's certainly vulnerable at the moment. All the pound pairs.
Yeah, I see. I have no divergence or any reason to think that the lows are in, even on the 4-hour. Not saying you can't rally back to 42, but I'm not in the mood to bottom pick this.
Yeah, you know what they say about picking bottoms. So
What?
Get smelly fingers. So.
Oh yeah, and you know what else they say? If you go to a store, a department store, and you buy something cheap, what happens when you bring it home in the next couple days? It breaks.
Yeah,
it breaks, right? Okay, so that's an original Pinkertism. If you buy something that's real cheap, you bring it home, it might break on you.
Yeah.
I see. Okay, Dale, thank you very much for today for coming with us. I know that you have to go to your live analysis room. See you in 10 minutes in your show.
Okay. Thank you, Mauricio. Nice seeing you and talking with you, Yohay.
Yeah,
I'll see you
my
guys
pleasure.
later. Have a great weekend.
You too.
Thank you.
Thank you, Dale. Okay, Yohay, so what is the situation right now? We have a rising oil, just picking heights, and low gold, just declining after the data. But of course, equities are up, dollar is up too. So what do you think on the current situation, and what we can expect for the next few hours and the next days?
Well, we got some good news from the United States, better than expected GDP. Not a huge surprise. The internal figures were not that excellent. I mean, less personal consumption, which is not that good news. But we did get good news from the Core PCE price index, the Fed's favorite inflation figure. We are seeing a stronger dollar against the safe haven yen and the euro, which is under pressure with the bad inflation figures from Germany. I think we will not have too much movement from here towards the close. But next week, I think we'll have a lot of action. Perhaps more dollar strength against the euro and the yen, and perhaps less so against the pound. The Canadian dollar is showing a lot of strength. Australian dollar is doing okay. Next week, we have Chinese figures. There are going to be lots and lots of headlines from, well, we already got them this morning, and throughout the weekend from the G20 summit. I think we can ignore basically all of them. There are not going to be any meaningful decisions over there. So I don't expect big movements towards the close. But next week, I think we'll have much more action.
Yeah, the euro dollar is going even down, lower and lower. Just broke below 110. What are the levels to watch there?
For me on euro dollar, it's 109.60 because that was the low line, was 109.57 this week, and this was also a high seen early in February. So that's for me a critical line of support. The top side, it's 110.70, which was also a very clear separator of ranges. Above 110.70, we have 112.50 and 113.75. To the downside, really, really critical support is only at 107.10. Perhaps we'll have a dip to lower ground under 109.60. We're not that far from there, but I don't think we'll have a big collapse of the euro just yet. I think next week we'll have more speculation about the ECB, more leaks. We'll have the we'll have the all Eurozone figure for inflation on Monday, and that could provide more drama than today. Today, perhaps we'll see another sort of grind, small move lower, but I'm not so certain about that. Anyway, these are 109.60 is the next level on the downside.
Yeah, thank you. We will have Northern Peru next week. What are your expectations on that? What kind of events and what number do you expect a big rise or a lower rise or increase or not?
I think it'll be positive, perhaps better than last time, 150,000, maybe closer to 200,000. We had, seems like a good month in the United States in terms of jobs and things like that. Jobless claims and also wages, I think, will be, of course, as important or even more important. We stood at 2.5% annualized, and if they stay at these levels, it's also good news. It could also bring forward the very elusive second rate hike. So I'm optimistic, but let's talk next week when we'll have more data, and I reserve the right to change my mind.
Okay, sure. So, and if you don't mind, we will have a RBA, central bank in Australia going for rates on. Yeah, I know from
Tuesday morning.
Wednesday or Tuesday?
Tuesday, March 1st.
Tuesday, yeah. We have the Australian dollar just moving above 0.772. So, what is your expectation on central banks and the Aussie? What we can spend on the pair?
Well, I don't think they'll rock the boat. And the same night, I think they'll, of course, leave the rates unchanged. And there's a wide consensus over there. They might complain a bit more about the strength of the Aussie because we've seen the Australian dollar rise just a bit since their previous meeting, but nothing earth-shattering. At the same night, we have the Chinese PMIs, the Caixin one, the dependent one, and the government one. I think that will have more impact on the Australian dollar than the RBA decision, at least this time. So if we have a deterioration of the manufacturing PMIs in China, that could be really negative for the Aussie. And if we have it rise even above 50 in the independent one and the Caixin one, we could have a rally. The levels I'm watching in Aussie dollar, 72.80 to the upside, followed by 73.60 to the downside, 71.40, followed by 70.40. So I think Chinese figures will have more impact than the RBA. The RBA so far has been sort of very, very, very neutral, and I think they'll remain in the same way also next week.
Thank you. And last but not least, in your show this morning, what is the concerns? What people are focusing in the European session right now? What is the most common questions there?
There has been lots of talk this week and also today about Brexit, about will they stay or will they go? Some people coming from the UK have various opinions about that, about the chances. I think most people think that the speculation will continue hurting the pound, but eventually, I think, eventually they'll decide to stay in. So that's the pound is garnered a lot of attention this week.
Yeah. I think, and for sure, it's in low levels, not seen in many times. Okay, Dale. Okay, Yohay. Thank you very much for being with us. It has been a pleasure as always, and see you on your next show on Monday, right?
Right, Monday 8 GMT.
Monday 8 GMT. Okay, thank you, Yohay, and see you. I have a good weekend. Enjoy Barcelona. I know Barcelona is fantastic.
Yes,
that's why you choose. Have a good weekend. Bye-bye.
Okay, you too. Bye-bye.
Bye-bye. Okay, guys, so that's it for today. You will have 3 more minutes until Dale for his live analysis room. I strongly recommend you to be with us and Dale, sharing your trades, sharing your ideas, providing feedbacks with the crew, with other people in the chat. Watch it for the interview today. They'll have a really big and interesting interview. Just watch it. So, US GDP reported a 1% increase in the last quarter. It has been a revision, an upward revision from 0.7. Surprise, because the market expected a revision to the downside to 0.4. Dollar is up, oil is up, equities are up, gold is declining a little bit. Euro dollar is going down. That's the situation right now. And right now, I let you know. Yeah, I will give you the entrance today. Just refresh your page, and you will see the signal, the live signal to the live analysis room. See you. Have a good weekend, and see you next week. Bye bye. Peace.